Chapter 16 talks about the statement of cash flows. And the statement of cash flows wasn't introduced in Chapter 1 in ACC 111, very briefly. But now in Chapter 16, statement of cash flows is covered more in depth. And this type of statement reports all of the cash inflows and outflows. So cash coming in, cash going out. So that's the main purpose of the statement of cash flows. Now, there are two different types of methods that are displayed or that are used. Now, in Chapter 1 in ACC 111, the method that was used for the statement of cash flows or to prepare that statement was the direct method. And the direct method just displayed the cash inflow and outflow from the three main sections, which are the operating activity section, the investing activity section, and the financing activity section. And that's it. Now, the difference between the direct method and the indirect method is that the indirect method starts off with displaying the net income that the business generated. Okay, so net income is the first item here that's displayed in the statement of cash flows. And that net income consists of revenue that was recorded on an accrual basis, meaning that the revenue that's generated, that net income that you actually see, revenue subtract out expenses will give you your net income. That net income that you see is not on a cash basis. So that balance that you see or the amount that you see it's not reported on a cash basis, which means that all of that net income that you see could be a mixture of cash and also credit, meaning that all of the cash hasn't been received yet, which means that you're going to have to make some adjustments in order to get to the true cash balance. Okay, so it's going to start off with net income. And net income, again, is reported on an accrual basis. And then right after that, you're going to have to, when it comes to preparing a statement of cash flows, you're going to have to provide the accounts that or items that needs to be adjusted so that you can get to the true cash balance to be displayed within the statement of cash flows. So net income is first. That's what's displayed first. Second is going to be the income statement items that doesn't affect cash. So these income statement item that doesn't affect cash affects what is presented in net income. So whatever the amount is in net income, those items do affect that item here that's presented in the income statement. So you will have to make adjustments to those accounts in order to again get to the true cash balance. So those type of items here that are non-cash items that doesn't affect cash are is the depreciation expense, any loss on a sale from from plant assets, or any gain from a sale on plant assets, or retirement on notes. I'm going to say gain on sale of assets, plant assets. And there are other items here that are classified as non-cash items, but I just want you to see that these type of items, these non-cash items, are presented after the net incomes or the net income is presented. So net income is first. The second are your non-cash items that's from the income statement. And then this is where we'll get to the items that affect the operating activity section. So this section right here, this is where if you're using the direct write-off method, you will start with number 3 as as the presentation. So this will start with number 3, whereas the indirect method, you starting off with net income, which is presented on an accrual basis, followed by number 2, which are your non-cash items that doesn't affect cash. So you're going to have to make adjustments to that. Now, operating activity section here, this consists of all of your current assets and liabilities and current liabilities. Because your current assets and liabilities, that's what you're using to operate your business. So operating activities consist of cash that's collected from customers, accounts receivable. So I'm going to put on here cash, accounts receivable. Ooh, let me erase that. Accounts receivable. Inventory. So you're in the business of selling items to make a profit. So in order to operate your business, keep the lights on, keep it running. You got prepaid expenses. Okay, these are current assets. That's going to affect the operating activity section. All right. Then we drop down to current liabilities. That consists of accounts payable, interest payable, income taxes. You got to pay the taxes in order to keep the business going. All right, so these are your current liabilities. And so this is what makes up your operating activities. Now, I do want to break these parts up when it comes to the statement of cash flow, because statement of cash flow is very complex to cover and also comprehend. So I don't just want to do one recording or 2 recordings. I may do a few parts so that it's not overwhelming to go over and also comprehend. So this is just an overview, or this recording is just an overview of the statement of cash flows under the indirect method specifically, because the indirect method is used most of the time by companies. So if you do take a look at companies such as Walmart's statement of cash flows or Apple's statement of cash flows, Microsoft, you'll notice that they're using the indirect method, which starts off with presenting the net income first, followed by any of the non-cash items from the income statement. And then after that, that's when you have your 3 sections: your operating activities, investing activities, and financing activity sections that's presented afterwards. So you'll notice that they are using the indirect method for the most part. The direct method is rarely used by businesses. And so the future recordings is going to be covering the statement of cash flows using the indirect method, specifically for operating activities, investing activities, and financing activities. So this recording here is just an overview of the statement of cash flows, and the next recording I'm going to do is going to be focused solely on operating activities.